Even if you think those things are valuable, which I'm pretty skeptical about, Bitcoin's more valuable. Now Bitcoin's a $2 trillion asset, and the financial system ultimately can't ignore it for much longer. If we do think that Bitcoin's going to continue to do well, then it goes without saying that lots of companies can adopt this same strategy and also do well. If you're 80% Bitcoin, you'll be 99% Bitcoin pretty quick. What I think is important for the operating business is to have synergies with the Bitcoin Treasury strategy. The financialization of Bitcoin, although we could inverse that to the Bitcoinization of finance. I also think that the 4-year halving cycles are over. The 95% of the Bitcoin have been mined. So when you think about the new supply coming onto the market relative to the trading volume, I think it's immaterial. And so that means that we're going to look at a very different kind of price path going forward.
Hi, Pierre. How are you doing? Everything fine on your end?
Hey, very well. How are you, Robin?
I'm doing really, really good. There's so much going on in Bitcoin. As I said to you before, it's almost like hard to pick a topic because there's too many interesting things going on. Maybe let's start off with what's currently for you the most important topic that you're kind of seeing within the Bitcoin space, if you had to pinpoint like one that we should like focus on.
Yeah, I think the financialization of Bitcoin, although we could inverse that to the Bitcoinization of finance. So I think that that's the most meaningful trend happening. And the reason I say that is because it's something that, when in 2014 I wrote Speculative Attack, I had it in mind that Bitcoin's success would not be due to payments, for example, right? Like saving 2% on Visa credit card fees. That's part of it, but I just don't see it as the driving force for Bitcoin adoption. I think what it is NGU, right? Number go up. So Bitcoin increasing in purchasing power has driven a lot of adoption. The bulk of it, maybe 80% of the adoption is just for people using it as savings technology and not really wanting the utility of the payment side, or the fun of the NFTs or something like that, right? Which we won't get into too much, maybe. So the when I look at NGU, so we have obviously seen Bitcoin spot price do well, right? As BTC USD. And that performance has actually drawn the attention of Wall Street. It's really interesting because for the past decade, Wall Street was saying blockchain, not to Bitcoin. So they were very interested in tokenizing securities, using private blockchains to be their internal ledgers, or to be doing supply chain management or medical records or whatever it is. So I think that they've come to realize that even if you think those things are valuable, which I'm pretty skeptical about, that Bitcoin's more valuable, and that now Bitcoin's a $2 trillion asset, and the financial system ultimately can't ignore it for much longer, because the entire premise of Wall Street, let's keep in mind, and of the financial system is to make money. So NGU is kind of the only reason for the existence of the financial system, and they can't ignore an asset that has performed this well over the past 16 years. So then the question is, how do they interface with it? We saw IBIT, the Bitcoin ETFs, get approved last year, but that's not really where the story begins in terms of the relationship between Wall Street and Bitcoin. You can rewind all the way back to 2013, 2014, when the Winklevi twins tried to do a Bitcoin ETF, and they got that denied by the SEC. Fortress Investment Group, a publicly traded company, actually did put Bitcoin on its balance sheet back then. But that experiment didn't last very long. And so you can kind of see already that the history of how Bitcoin might integrate into the financial system goes back to early days. Then we have to look at the adoption of Bitcoin by MSTR in 2020, right? So Seyr, I think, was uniquely positioned to one, adopt kind of the Bitcoiner worldview. I think that he was already had a lot of overlap with that worldview, and two, having an operating company that would be able to accumulate material amounts of Bitcoin and be publicly traded. Now, when Seyr started buying Bitcoin, and MSTR, was just kind of adopting it as a Treasury reserve asset, it didn't. It seems like he didn't really have plans to leverage up, right, and to borrow against those Bitcoin in order to buy more Bitcoin. But that opportunity came about kind of organically, as you would expect. MSTR's stock price started to have a relationship with the Bitcoin price, and a volatile one. And so when you have volatility, that means that it can become very interesting for a public company to issue what are called convertible bonds, that are this equity-like debt instrument that is very appealing to Wall Street. And they were able to buy more Bitcoin with the proceeds from those convertible bonds. And then they continued to do it. And so MSTR has now grown into having tens of billions of dollars worth of Bitcoin. They're one of the largest Bitcoin holders in the world. I believe it's 600,000 Bitcoin that they currently have. So then I think that the question that everyone on Wall Street and in the community had was, okay, this has been very successful for Seyr and for MSTR, but can other companies do the same thing? And so we saw Metaplanet take the kind of the similar approach, had huge results from that. And when I think about it from first principles, I don't really see why other companies can't do the same thing, because it's really perhaps the most accessible strategy there is, of you're just going to buy Bitcoin. So, you don't need you need to be very careful about custody and making sure you don't lose the Bitcoin, etc. But at the end of the day, it's not, it's a fungible commodity. So it's not like they need to have some kind of specialized semiconductor manufacturing equipment or something like that. And two, that the thesis is that Bitcoin's price will increase more quickly than the cost of the debt, whether it's in the form of convertible notes or more recently perpetual preferreds. And so if we do think that Bitcoin is going to continue to do well, then it goes without saying that lots of companies can adopt this same strategy and also do well. We can get into a debate as to whether they'll outperform Bitcoin or not. I actually just gave a presentation about this in Denver about kind of Bitcoin Treasury company valuation. And where I shake out on it is that a Bitcoin Treasury company can outperform Bitcoin if you purchase it at an attractive valuation. If you overpay for it, then you're actually going to end up underperforming Bitcoin. And so that's been something I've been very interested in looking at. I recently joined the board of directors for Strive, which is a Bitcoin treasury company based here in the United States. It's been really interesting to kind of see it from the inside.
That's super interesting. And there's so much nuance to like Bitcoin treasury companies, because I mean, if you take it literally, like every company that just puts a Bitcoin on the balance sheet is a Bitcoin treasury company. So like my small podcasting, I save everything in Bitcoin. Like you could make the argument, oh, I'm a Bitcoin treasury company. But then there are treasury companies that just do that, or like have like only a little bit of operational, like maybe have a bigger operation. Even with strategy, the development was really interesting. If you look back in 2020 before Bitcoin, they had an operational business that were responsible for most of their revenue, or like all of the revenue. Now strategy is so much bigger, and they're making so much more money from the Bitcoin strategy than from their actual operational business that they had before the Bitcoin, which is kind of interesting development. And then we have also companies that like are only focused on the Bitcoin treasury side, and like not having an operational side of that. Maybe like how do you look at the different ones, and do you think it's like long term also sustainable to have companies that just do the Bitcoin treasury side of things, like just buying Bitcoin and like for debt and like using those financial instruments? Or do you think those companies have to develop operational businesses, or like acting as a bank almost maybe in the long run, to like be sustainable and survive?
Yeah, so it reminds me of kind of a joke we have that if you're 80% Bitcoin, you'll be 99% Bitcoin pretty quick. And so that's kind of the way I see it, is that you might start out saying, oh, it's just going to be a small Bitcoin position relative to our operations. But before you know it, it's sizable and material. Um, it's an interesting question in the reverse. Do you need an operating company to sustain a large Bitcoin stack? And I think yes and no. So you can buy Bitcoin from free cash flow from operations, right? That has tremendous advantages, especially, for example, if your stock price is undervalued, you don't want to necessarily be issuing shares to buy Bitcoin because you want to find other ways to buy Bitcoin. Um, but look, I think that the number one uh, growth driver for these companies is not going to be the operating business and the free cash flow from that. I really think it's going to be from increases in Bitcoin's value. And so those mark to market unrealized gains are, what I think the investors should be excited about when it comes to a Bitcoin treasury company. And convert well, and along with that, if we think about it like Satoshi exposure per Bitcoin, right? If we want to use that terminology. Um, now, what I think is important for the operating business is to have synergies with the Bitcoin treasury strategy, meaning that you want the operating business to really help with the capital raising, right? So you want capital markets expertise to be a part of the operating business. That's what I really like about Strive, is that their operating business is asset management. And so they've been working in capital markets for several years now. That's kind of their management team expertise is on. And so I think that when it comes to raising capital, that's a huge advantage that you wouldn't necessarily have if the operating company is something unrelated. But I also don't think that it's a must-have, right? Obviously, MSTR has done very well and has built up a capital markets team, and that's going to continue to do well. Even though they have a software business, so I don't think that it's exclusive. But what it does take is a tremendous amount of conviction on Bitcoin. Um, any company that has a successful operating business, the board of directors is going to be very risk averse with regards to taking on a completely unrelated strategy of accumulating Bitcoin on the balance sheet, right? And so I think that it's going to be an uphill battle for Nvidia or Apple or Amazon to adopt this approach and to start buying Bitcoin in material quantities. Even Tesla, for example, I mean, they didn't buy a huge position, right? So their stock price is not driven by Bitcoin's performance. Um, so I do think that it is sustainable to have a company that is essentially 100% focused on the Bitcoin strategy. And that really it's a bet on Bitcoin's future performance and having conviction on that.
It's interesting. You mentioned the speculative attack before, the thing you wrote, and also when we think about what's going on with all the different treasury companies, for me, that's just like a part of that speculative attack on TradFi. I think you said like Bitcoinization of finance, which I love the perspective shift there. Where would you say we are in this journey? Because it seems like we are far, but then it's also like, if you look at the global like S&P 500 list, like the companies, how many Bitcoin they have, and it's like, yeah, like there's Tesla that have a few, but compared to like what they could have, it's like only a little bit. And then it's like, is there any other companies? And it's like most companies still have like no clue about Bitcoin. Like, where in this journey of like a speculative attack on TradFi are we really currently?
Well, when I was first learning about Bitcoin, I thought that Bitcoin would take over next year. I thought that the U.S. dollar would, collapse, and that we'd be living in a Bitcoin economy very quickly. And I turned out to be wrong. It's going to take longer than 1 year, and so I keep kind of extending the time horizon of, okay, we're so early. We're 16 years into this, but it seems like we're still very early, and somehow the Bitcoin price is over $100,000, which is just, it's unfathomable. When you put those two things together, of yes, Bitcoin's a $2 trillion asset, but Nvidia, for example, is a $5 trillion company. And so, Bitcoin's not the biggest thing around. Gold is 20 trillion, I think. It might even be more now that the gold price has gone up more. So, and then if you look at the global bond market and real estate in the hundreds of trillions of dollars, right? I do think that we are still early. And to try to put a time horizon on it is really challenging. I know that there's like the power law type models, but it raises the question of, if you've got everyone who's borrowing dollars to buy Bitcoin, you're going to pull future demand forward, right? So it's an interesting question of how much do the Bitcoin treasury companies borrow from the future? And that actually can have reflexivity to it, because if you think about it from the perspective of Forex markets and currency competition, the more people borrow the weak currency, in many ways, you end up creating more weak currency. And so you increase the supply of dollars when you borrow dollars, quite often. Not all the time, but that tends to be the net effect. Maybe, in response to that, the central bank would raise interest rates, but it seems like they're lowering interest rates right now. And so when I look at it from a monetary dollar perspective, there's this huge tailwind in, let's call it the short term. And when I say short term, I mean like the next 5 years. I don't even mean, the next 5 days or whatever. Because now, to me, the long term is like the next 50 years. But it just goes to show, as you grow older, right, you start to have a lower time preference. I think that could pull forward a huge amount of demand. And so Bitcoin could really outperform the power law in the short term over the next 5 years, relative to the model. Now, I also think that the 4-year halving cycles are over. I think that the 95% of the Bitcoin have been mined. So when you think about the new supply coming onto the market relative to the trading volume, I think it's immaterial. And so that means that we're going to look at a very different kind of price path going forward.
So it's a super interesting question, because a lot of people now have that of saying, hey, 2025 feels so different to 2021 and feels so different to 2017. It might just be like a very different year, and it will be interesting to see where we go in the next, like, now we have like 2 months left in the year, and so where are we going? Do we have a usual blow off top as we usually have? Are we ending up at like 120k this year, or 150k, or maybe even like 300k with a weird bull run, or maybe it's a down year, because maybe the 4-year cycle already breaks this year. Like, we don't know, because I don't know where we started this year, but probably around the 100k. So like anything around under the 100k probably will break this 4-year cycle of 3 years up and 1 year down. And I talk about that a lot, actually, where I think Bitcoin has shifted a lot of like how it is structured. And what I mean by that is like we've came from Bitcoin being a small speedboat to being an aircraft carrier, because like there's like bigger players in there. And if a big company comes into Bitcoin and they're having a plan to execute, a 5-year plan, a 10-year plan to execute and accumulate Bitcoin, they're not suddenly stopping just because the price goes up or down. Like they are just executing their plan that they have. But then when you look back at like 2012, 11, 13, 14, there weren't that many companies involved in Bitcoin at all. And most of them were like more retail folks that had panic if Bitcoin goes up, hugely up or down panic, like fear of missing out, or like oh shit, I have to sell some to make some profits and diversify and all of that. And so it's really interesting to look at how Bitcoin is kind of different now, what kind of a different beast it is now. So I think it's just a matter of time till the 4-year cycle breaks, even if it doesn't do it now, like most likely does it 4 years later. I'm really like, I have a hard time believing that 2026 will be a down year. Like I couldn't believe, like, I couldn't figure out, like, if you think about what needs to happen for 2026 to be a down year, there's no bad news currently in Bitcoin. Like everything is just like, it's so boring. There's so less bad news that we are fighting above some relay policy.
Yeah. Yeah, I agree. I mean, I think that we'll probably end up 26, between 200 and 250 thousand per Bitcoin. And I think that when we look at the cycles, people complained always that Bitcoin's too volatile, right? That was like the big complaint about Bitcoin. And Wall Street actually figured out how to monetize that volatility. And so when you look at the amount of options activity on IBIT, on MSTR, on even on spot Bitcoin, right? And then futures, CME futures on Bitcoin, there's a massive, massive layer of derivatives that are trading on top of Bitcoin. And I actually think those are countercyclical. And so when Bitcoin's going up, they mechanically cause a lot of selling. And then when Bitcoin's going down, they mechanically cause a lot of buying. Just due to the kind of the natural hedging activities relating to this world of derivatives. And so I think that's what puts a lot of dampening on the upside. So I don't think that we'll see a parabolic top like we saw in 2017 or something like that. But it also, on the downside, does help cushion kind of the downdrafts where, I don't think we're going to see a negative 80% pullback. So there's that. And then there's the passive ETF flows. So the launch of the ETFs was the most successful launch of any ETF product ever. And BlackRock now earns a lot of money from their Bitcoin ETF fees. It's a material amount of revenue for them. And I still think we're very early there, in the sense that a lot of financial advisors and brokerages still don't offer access to the ETF. So step one is just allowing clients to buy it if they want to buy it. And then step two is when we really move the needle of saying, advisors suggesting to clients, you should have 2 to 5% of your portfolio in IBIT or in some kind of Bitcoin ETF or spot Bitcoin, right? And so when you start getting those recommendations, that's when we'll start seeing massive passive capital inflows into Bitcoin. And that will continue to really prevent any kind of downdraft, where now really what we're trying to do is digest selling from OG hodlers, right, who've had a just tremendous up market for the past 16 years, who are now, they need to go donate to charity or something. And so we're going to continue to see whales selling old coins, but it's going to continue to be absorbed by these new institutional buyers. And I think that this represents the relay race of Bitcoin. And it's actually also great from a political perspective, right? That we want Bitcoin ownership to be widely dispersed in society so that politicians feel like they can't really do anything about it. Otherwise, they will anger too many voters So it's really important to make sure that Bitcoin goes beyond just, the libertarian cypherpunk demographic to a more mainstream demographic.
I think so too. And this is actually a thing where, and there's a lot of people that say like, oh, I don't want to have Seyr in the space. I don't want to have like all those suits coming in, and I don't want to have like all the the TradFi in. And I'm like, as long as Bitcoin is decentralized and secure, we want them to be in the room. Like it would be a red flag for me if we don't have any of those institutions in there, because it means they might just attack it and they might just be like maybe successful with that. I don't know. But if we have a lot of different demographics in Bitcoin, just as you said, politicians will have a suicide mission if they go against Bitcoin, because their voters say like, oh, like I like Bitcoin. Like, why does he not like Bitcoin? Like, and they basically then have a suicide mission because like, they're like, I don't want to lose voters. And so it's an interesting argument of like having the demographic distributed.
Yeah, and look, to the people who think that BlackRock is going to co-opt Bitcoin and centralize it somehow, I would encourage them to go find BlackRock's marketing material for IBIT and just read through it, because you might be surprised. You'll see that BlackRock, in their marketing for the ETF, their arguments for why investors should have exposure to IBIT is that Bitcoin is decentralized, Bitcoin's a global payments monetary system, and Bitcoin is scarce. And so why would they go about undermining their marketing pitch by co-opting it and saying, oh, you have to run a BlackRock node, it's and centralizing it. So I think that people need to be a little bit more realistic about what the incentives are here. And that really, it gets to kind of a philosophical question of, are we here because we don't like Visa and BlackRock and JP Morgan? Or are we here because we don't like the government monopoly on money? And if we're here about the government monopoly on money, I think the most psychologically challenging thing for Bitcoiners today is that we've won. And so what does it look like after you've won? What do you do? Right? And so I think that's a big challenge, that's a big question that's being posed to Bitcoiners is, what do you do after you've won? Because now fiat currencies are no longer a monopoly, right? And less so every day. So, once here in the U.S., once we get the capital gains tax exemption, we'll really claim total victory. But I would argue that on a practical basis, we've won, because you can go and you can pay anyone in Bitcoin today. It's a different question of whether they want to get paid in Bitcoin, right? That's something we still have to work on. But we all have the freedom to do that, and so and there's the liquidity to do that. So I think that's probably the biggest change, where for some people it feels like Bitcoin has lost its way because it has won. And I don't feel that way. I just think that we're in a new phase, and that's okay. Change is okay.
I think so too. And it's, we've shouted from the rooftop like, oh, like Wall Street is coming, and then they came and they're like, oh, we don't want them. It's like, it's hilarious for me. But is there any concern for you that when people are really focused on the number graph technology, on treasury companies, on ETFs, on basically not holding your own keys, not running your own node, that over time there might be the threat of not enough people run their own node, not enough people care about the freedom aspect of Bitcoin, and so maybe we lose the decentralization and security aspect of it?
Yeah, I think that is a realistic concern, because basically when we think about Bitcoin's value proposition, a lot of it hinges on the option value of running your own node and holding your own keys, right? That you have the ability to do that, the freedom to do that. And then, you'll hear one extreme say, well, that option, that freedom is worthless unless you exercise it, right? And so at the other extreme, you could say, well, you don't need to exercise it at all. Just the fact that it exists, that captures the total value. And so you don't need to worry about holding your own keys and running your own node. I think the truth is somewhere in the middle. And so I think that, yes, there will be a lot of people who free ride off of the decentralization, right? So, somebody who just holds the ETF, and that's all they do, and then they retire, and then they're able to benefit from the increase in purchasing power due to just holding the ETF without ever having done anything else. I'd say, they earned it, right, in the sense that they underwrote the risk, and they created demand for Bitcoin. But they did benefit from everybody else who was running a node and holding their own keys and keeping Bitcoin decentralized. So it's really challenging to at the extreme. We have to start fudding third-party custodians and saying, "Oh well, Coinbase could get hacked any day, right? Tomorrow, Coinbase could get hacked." And I think that that gets less and less effective as each day goes by. That Coinbase has not been hacked, and so we really have to, I think, emphasize the intrinsics of like sleeping more soundly at night because you hold your own keys, or that doing a multi-sig, right? You can't do a multi-sig if you're using Coinbase. You could do collaborative custody. There's also, I've seen people promote multi-institutional custody. So, there's that aspect of it. But also just talking about kind of ease of use, right? That it is easier to create a Bitcoin wallet than it is to sign up for a Coinbase account. And so, if you're onboarding somebody else, maybe you set them up peer to peer, and they buy Bitcoin from you or something. I don't know, or they sell goods and services to earn Bitcoin using BTC Pay Server. That will continue to have that adoption. I also think that different people live in different jurisdictions. So just because here in the US you have first world privilege and you can go buy an ETF, if you're living in a country that, for example, is like Cuba or North Korea, you might not have any other option than to self custody, right? And so I think that we have to keep in mind that Bitcoin is a tool for escaping totalitarian governments, and not everybody necessarily needs every feature of it.
Yeah, it's a good point of like, and this is actually something I've learned with the podcast, because I did it global and not just in the German speaking area. I could have just like spoke only German and only speak with Austrian and Germans. But speaking with African Bitcoiners, speaking with Indian Bitcoiners, Australian Bitcoiners, American Bitcoiners, opened my eyes a lot to the use cases of Bitcoin outside of, like number goes up, where you have situations where someone, only because Bitcoin exists, can break out of a very bad situation. And we had like multiple of those cases. But then also just today, like just the episode before that I did with Rick. Rick famously lost 25 Bitcoin because he stored his seed phrase online. And so he did self-custody, but he lost it. So it is always this interesting argument of, with great power comes great responsibility. And there are 100% people better off that might just like have, an Bitcoin ETF that say like, oh, I don't trust my own technical skills enough, and then I want to outsource that, which is fine. I'm just always concerned that more people have to take self-custody and running their own node and like doing the defensive part. And I think there's like a lot of people, like there's a strong core, no pun intended, a strong core people that actually defend the network and really make sure that Bitcoin is always protected. There's a lot of people that really care about the freedom aspect, very much so.
Yeah, and look, at the end of the day, I like to point out that all the Bitcoin are self-custodied, right? So Coinbase like holds its own keys, and that they run their own node too. They have to, and so I don't think that there's like a threshold question. I think that my biggest concern would be if Coinbase or other custodians started lobbying the government against self-custody, right? And saying, oh, there needs to be more KYC AML and you shouldn't be able to hold your own keys. That would be a problem. the reality is that I see them lobbying for the opposite. And so, firsthand, right? It's not like they're doing one thing in public and doing another thing in private. Like I think they've been very consistent about having that ethos of being friendly towards self custody, and they actually have Coinbase Wallet, which is a self custody product. Now, it's Ethereum centric, blah blah blah. I get that, but look, it's actually interesting that self custody is even more important for the DeFi Ethereum entrepreneurs and ecosystem in some ways than the Bitcoin ecosystem when it comes to public policy. So a lot of the debates in public policy are not about should you be able to hold your own Bitcoin. They're about should you be able to hold your own derivatives contracts on a DeFi exchange that is outside of CFTC jurisdiction, right? Which is a far more complex legal question. But if they can hold the line there and defend your right to hold a derivatives contract outside of the walled garden of TradFi, they're essentially, I'd argue, not a human shield, but a first line of defense against governments encroaching on self custody.
It was interesting to see because one thing I heard. I mean, I'm not in America, and so I don't have the politics as close as the Americans. But one thing I heard from Americans saying like this was a thing where under the Biden administration, it was a lot more hostile to crypto and a lot more hostile to like altcoins. And this is now kind of gone with Trump, where there's a lot more friendliness to crypto and altcoins. I mean, he himself does it. And so this might be just like one small thing that kind of happened with the new administration that from the point of a Bitcoin maxi, not bad, but like just like I mean, some probably describe it as bad. I don't really care about it because I think in a free market, Bitcoin will win either way. And as the more free the market is, the better it is in a way. And so that might be the case. Did you witness that like a crypto and altcoin project that are kind of scammy are now surviving better?
Yeah, I really see them as the canary in the coal mine, right? But another way to think about them is when an aircraft, military aircraft, is being shot at by a heat-seeking missile, they'll blow out chaff from the back, which is a way of getting the heat-seeking missile to explode before hitting the airplane and to miss the target. And so I think altcoins have been very valuable in that regard, that they have been a denial of service attack on regulators, where regulators have been so busy asking themselves, oh, is it a equity? Is it token? Should it be regulated? How should issuance be regulated? And then it created a very positive contrast with Bitcoin, where they say, oh, well, Bitcoin's obviously a commodity because you have to mine Bitcoin. And so there's no centralized issuer. And so it's fine, which is really subversive when you think about, the monetary competition that's happening. And so I think that the whole altcoin debate gave a lot of time and room for Bitcoin to gain a foothold and to become entrenched, and now to integrate into the financial system. The key problem with altcoins is liquidity, right? So when we look at why why are we, or why am I a Bitcoin maximalist? You could point to like the technology, right? I do think Bitcoin has better technology than all the other altcoins. It's the most reliable. It's the most battle hardened. It's very Lindy. It's the first. But it also just has a lot more liquidity than the other altcoins. And so when you think about currency competition, I think that a lot of it comes down to liquidity network effects that are self-reinforcing. And so the more liquid Bitcoin is relative to number two, like Ethereum, the more liquid it will be in the future. And so that gap is only going to continue to increase. And we saw this very recently. There was one day where there was a deleveraging event where Bitcoin was down. I think Bitcoin was down like 10%. and Ethereum was down like 30%. And the reason why that happens is because Ethereum's order books are so much thinner than Bitcoin's order books. And there's so much less participation in those markets, and there's just less ability to absorb shocks like that. And when an investor looks at this market, they say, "Well, I don't really want to hold something that's illiquid relative to Bitcoin, right? I want to hold what is the most liquid asset, especially if they're deploying $10 billion, right? Why would you buy $10 billion of an altcoin whose market cap is $10 billion, whereas Bitcoin's market cap is $2 trillion? You don't want to move the market, right? And so I think that altcoins are just a huge distraction in general, which is positive when it comes to policymakers, but it's negative when it comes to investors.
Is that why the Ethereum ETF is not as successful as the Bitcoin one?
I think that's part of it, and I also think Ethereum has a bit of a marketing narrative problem. When we talk about Bitcoin, our narrative is digital gold, right? It's the scarcity. There's only going to be 21 million Bitcoin. It's better than gold. It's an upgrade. Ethereum, they try to say, oh well, it's ultrasound money. So they try to say that it's like ultra digital gold, right? It's better than Bitcoin and gold. At the same time, when it comes to the demand picture for it, they emphasize the world computer aspect of it, right? That, oh, you're going to actually use this system in order to send stable coins around. And then the question is like, well, hold on, am I holding stable coins or am I holding ETH? Why are you, promoting stable coins here, or tokenized securities, or all this other stuff? And then furthermore, why is it that Circle and Tether and Stripe and all of the other leaders in the stablecoin industry are launching their own layer ones that compete against Ethereum? So I think that the value accrual thesis for Ethereum is really challenging and has not gotten a lot of people excited on Wall Street, because it's just so all over the place. And that Ethereum itself, it's got a spotty track record in terms of having switched from proof of work to proof of stake, which I think really questioned, how decentralized is it? Because in a really truly decentralized ecosystem, I don't really see how you could transition from proof of work to proof of stake. I'll just point to the obvious. They had to create an official contract that was endorsed by the Ethereum Foundation that said, okay, everyone, deposit your Ethereum here to transition to proof of stake. And so just the moment you have an official contract, you're not decentralized. Let's not kid ourselves. And so I add on the difficulty bombs where they kind of forced everybody onto the new chain. It doesn't have that key advantage that Bitcoin has. And so that's why I think that it's going to continue to struggle going forward.
The most important thing for your Bitcoin journey is not buying Bitcoin, but it's how to keep them. And yes, you have maybe the right tools, but how do you actually go ahead and stick it all together so it's the most secure for you personally? Self-custody is a deeply personalized journey, and the Bitcoin way is helping you exactly finding that correct setup for you personally. They are also helping you with securing your own cybersecurity. And if you want to go one step above all that, you can even get a consultation for a Plan B residency. Go to thebitcoinway.com/Robin and you will get a 30-minute free consultation. I finally and officially mine Bitcoin. This is not just something to stack more Satoshis, but it's most importantly also to support the network. Individual miners are the ones that keep the Bitcoin network decentralized. And by the way, you get KYC free Bitcoin. That's why I use Simple Mining. I get an actual proper Bitcoin miner. They set it up for me. They repair it if it breaks down. And most importantly, they let me choose the pool and even connect my own full node. I'm completely sovereign and I'm completely in control, and I can sign up with Ocean, no account needed. I just give them a Bitcoin address and then there's mining going on. No KYC, nothing. So if you're ready to mine Bitcoin, go to simplemining.io, tell them you come from Robin, and let's mine Bitcoin together. I want to tell you about something very special to me. It's called Microseed. If you hold your Bitcoin in self-custody, and you should, you know how critical it is to secure your seed phrase. You should not have them on paper. You should not have them on anything else than titanium. With Microseed, you can engrave your 12 or 24 word seed phrase, the entire seed phrase, onto a 1-inch small washer. Yes, just one washer. All 24 words on that one washer. You can hide that thing everywhere. And even better, you don't need to buy a new kit every time you have to get a new wallet. You can make unlimited backups because Microseed is not selling the washer. Microseed is selling the device that stamps the washer. So you get the full kit with the device, with the washers, with the hammer, with everything you need to get started today. And you can make with that unlimited amount of backups. Go now to microseed.io. Again, that's microseed.io to get your last backup tool you ever need.
How do you look at the current debate also with Bitcoin, the relay policy with op return and with knots in particular? How is that for me? Because I look at that and I feel like 2017 we had the whole debate with block size, and this was a way more. I think everyone agrees it's a way bigger issue. Changing the op return limit versus changing the block size. And so when I look at like what people are discussing, seeing now this specific debate shows me how much more decentralized and how much more robust actually Bitcoin already gotten, that we are now discussing and debating things on a way higher level that have less impact on the fundamentals of Bitcoin. And for me, my main takeaway from that whole debate is Bitcoin is extremely decentralized, and there are a lot of strong groups that are willing to defend it very, very emotionally.
Yeah, so I think that the more inconsequential something is, the more inflammatory the controversy is. There's a famous saying for this: bike shedding, right? So you're building a nuclear power plant. What do people end up disagreeing on? What color should we paint the bike shed, right? Because getting into the other debates, it's either not a debate because it is the way things have to be, or it's so complex from an engineering perspective that it's not a debate that people can easily engage in. If we talk about, for example, like multi-sig with Taproot using Frost, and debating kind of the key signing process and the strength of the cryptography, way too hard for normal people, right? Or even debating like quantum cryptography, way too challenging. Like it's way above my head, right? Way above my pay grade. I don't pretend to be an expert, but debating spam on Bitcoin, that's a lot easier to debate, right? So I think that it attracts debaters. So that's for one. Two, why has this become such a big issue? It's really because I think that when we look at the block size wars and kind of the time between 2017 and today, or really the time between 2017 and 2023, I would argue, there was a view that Bitcoin adoption is all about freedom money and the self-sovereignty. And so when people are using Bitcoin on chain, that is going to be the demand for block space, and that's going to drive up transaction fees. Two things happen. One is that I think Lightning ended up being more successful than people expected it to be. And so it actually took a lot of demand away from on-chain transactions. SegWit and Taproot adoption have also decreased demand for block space because they're more efficient. And of course, the Wall Street has taken away demand for block space because now when you have somebody who bought Bitcoin at Coinbase in 2015 and they sell it to the IBIT ETF in 2025, that is not an on-chain transaction, assuming they just left it at Coinbase, right? They sell it on Coinbase. BlackRock buys it on Coinbase. It's just a SQL database ledger entry, and it has not created any on-chain demand. And I think that then means that there's a vacuum of block space that gets filled with spam, and then people get upset about the spam. And I think it's totally legitimate to get upset about the spam. Like, in an ideal world, that vacuum would just go unfilled, right? We just have smaller blocks. That is good for nodes. And that's great for transactors who don't have to compete with spam. And so then we can get the cost of sending a Bitcoin transaction below a penny, sub Satoshi transaction fees. It's all great. Unfortunately, there's bad actors out there who are spamming the network. And how do we deal with that? I do think that there is room for lowering the op return limit to something a little more reasonable. So I think that, getting it below 200 bytes is more reasonable than just having it uncapped or at, 100,000 or 10,000 bytes or whatever it is. So that I think is what has caused the debate, is the lack of economic demand for block space. And we could talk about decreasing the block size limit as well. Or we can just wait. I think ultimately there will be demand for block space, right? Even if it grows much more slowly than we expected it to 5 years ago. But maybe the thing that will be most bullish for block space would be if fiat financial system or payment rails started falling apart, right? What if Visa or the Federal Reserve, stop working and all the payments are stuck, and then people have to use on-chain, or use Lightning that will cause channels to open and close? That would be another way that spam goes away, is it becomes too expensive.
And I think this is the major thing is like, right now, I transact in Bitcoin on chain every single week, and I kind of like that the fees are so low. But I'm also well aware that how does Bob Burnett put it? Bob Burnett puts it really nicely. On-chain transactions are like rolling in a Rolls Royce. And for most people, it will be just way too expensive to do it in the future. Right now, it's super cheap. It's like I send $1,000 to El Salvador. I pay like 70 cents for that. That's like a super cheap transaction. And it gets confirmed within 20 minutes because paying 70 cents is almost like priority now on the blockchain. And I think this is a short-lived luxury that we currently have. And this luxury will move up to Lightning, to Fedimint, to all other projects. And the main chain, we will spend tens of dollars, hundreds of dollars, I think at some point even thousands of dollars for a transaction, because Bitcoin, the main chain, is the most secure thing. And this will just be like the most secure we'll ever have. And this will be the transaction that you make for a huge transaction, not to like pay an employee for like $500 or like buy a coffee for like that.
Yeah, maybe, but maybe not, right? So even though Bitcoin's the most secure, on-chain transactions the most secure, look, oxygen is the most valuable commodity we consume as humans. We don't pay anything for it, right? And so I think that if the protocol researchers continue to make efficiency improvements to how we use on-chain, and like imagine a world where Visa says, actually, we're going to move everything to Lightning, and we're going to run one Lightning node, and Visa payments will be free. What does that do to demand for on-chain transactions? I think it probably decreases it. It would make Lightning appear to be very centralized, even though it continues to be permissionless and interoperable. But that you would have, just one huge node. Everybody's connected to it. It's clearing like trillions of dollars worth of Bitcoin, and on-chain transactions continue to be very cheap. I think that's fine. I think that that's a fine outcome. It means that we've won before, beyond any expectations we could have ever had. But it's, and I also think that Bitcoin continues to be just as secure, even when transaction fees are very low and the block reward, the block subsidy goes away. I still think Bitcoin continues to be secure because Bitcoin mining continues to be permissionless. And I think that that's ultimately the counter argument for when people say, oh, Bitcoin mining is centralized because you have these mining pools that are have all this market share. Yeah, true. But starting a mining pool is permissionless. Bitcoin mining is permissionless. And so anybody can go in there and compete. And again, it's the option value that I think is determinative, not is the option actually being exercised? Is everybody mining? Is everybody running a node? Is everybody holding their own keys? No, we don't need to achieve perfection for Bitcoin to continue to be the most decentralized monetary system in the world.
That's interesting, because I always think or thought that an on-chain transaction at some point will be extremely, definitely a lot more. It's also like interesting because we talk now in dollars, and like dollars are devaluing at a rapid pace. So, like talking about a dollar value of an on-chain transaction fee in 20 years might not be as relevant as the dollar might change face a lot, or like have a different name, or like whatever it is. But having more, because I'm of the opinion, like I do everything on chain as long as the fees are not too high. I like on chain more than Lightning. Like obviously, I have the plan to own as many UTXOs as possible and as big as possible. And so, I would prefer a way where it's still possible to do on chain, and where I don't have to go to Lightning or Fedimint or other layers for like, I don't know, like a transaction of today, $1,000. Probably like, we already see it. Like if you buy a burger, it's mostly in Lightning already, but there's like other reasons, not only the fee, but the instant settlement, like the speed and all of that. But I don't know. I have a hard time believing that, because it's like the whole world moves to that thing. And I think just like the on-chain layer will be so busy. I mean, of course, like not for small transaction, but it's still like we are so small. And, yeah, I don't know. I have a hard time believing that we will have low transaction fees, even in a world where most people use Bitcoin and it's a base layer.
My expectation is that the past is a guide to the future, and that transaction fees will be volatile, and that high transaction fees will cause changes that will bring about low transaction fees that will attract demand that will cause high transaction fees, and that it'll continue to just be bouncing around.
That's interesting.
See. Yeah,
I'm really looking because I don't have an like defined opinion on that, but I just look at it like, oh yeah, like what if like the whole world moves on there? But then, as you say, like there is a really valid argument of saying like there will come software technologies, there will come solutions for that very problem of like, if there's a lot of demand for on-chain, there's a lot of opportunity for innovators to come in and make something off-chain, or like second layer solution, or like whatever it is, like Visa, Mastercard, and all of that. And then like it gets cheaper again, and then like people come again on the on-chain layer. It's an interesting. Never looked at it that way. I think free market will rule in the end of the day.
yeah, absolutely.
One or two more things I want to get into is two things. I think you brought up Nvidia in a tweet recently where you showed like how hugely Nvidia kind of outran in the past couple of years, and also gold is interesting. I mean, now it came down a little bit again. How do you look at Bitcoin in the current perspective compared to something like a tech stock like Nvidia, or something like an old sound money asset like gold? And how are you surprised that like gold and Nvidia like did so well in the past couple of years, or like with gold this year?
Yeah. So I brought this up because I was thinking about people were saying that Bitcoin was going to go up in October, right? They were calling it Uptober. Um, and it did hit an all-time high 3 or 4 weeks ago. But now we're back to like 110. And it kind of feels like this year it's been mostly sideways around $100,000. And I was trying to figure out what are the different reasons for why that might be the case. Obviously, as we mentioned, there's the OGs selling. But I also think that there's a lot of money capital that would invest in Bitcoin for technology growth, mindset, that is investing in Nvidia as kind of the fastest horse in the short term. And when I look at Nvidia's stock price, I think that today it seems priced for perfection. It might be a little overvalued. Where the market cap is $5 trillion, it assumes a very high growth rate for their sales, for their revenue, and that they're going to have competition, right? That this is a huge opportunity for lots of semiconductor and chip manufacturers and system builders. And so I don't know that they'll be able to sustain the high margins they have. And that's where I think that a lot of that capital might actually rotate back into Bitcoin. When Nvidia starts going sideways and Bitcoin starts going up, we'll see that kind of activity. Likewise on the gold side. So when I look at what is driving the gold price, it is central banks buying for the past 3 years. Central banks have been accumulating. And I just don't think central banks are good investors. So I'm sorry if I offend any central bankers listening to this. I think that they are looking in the rearview mirror, and that they are like the generals who are buying lots of horses before World War I, right? To build up their cavalry, and that they're going to face tremendous losses on that. Gold is completely overbought. And so I think that gold's going to underperform Bitcoin, and Nvidia is going to underperform Bitcoin over the next, say, like 5 years. And, when I look at the gold price, what I look for is how far away is it from, let's say, like the 50-day or the 200-day moving average. And I think it has topped at this point. Well, maybe I'll regret saying that, but especially in Bitcoin terms, right? In dollar terms, obviously, dollar inflation can take away. And so I think that those two capital magnets have been at the margin pulling buyers away from Bitcoin, and that will reverse. And so we'll see, I think, capital rotation into Bitcoin. And that's why I'm very bullish on 2026. Or let's say the next 14 months, right? Because I think that there's going to be catalysts in November, December as well here in the shorter term. So it really gets to why do we think Bitcoin has fundamental value? It's a scarcity, right? So there's no reason why lots of people can't manufacture lots of AI chips like Nvidia and push down the scarcity there. And when we look at gold, all it takes is 5 to 10 years for somebody to set up a new gold mining facility and to increase the supply of gold on the market, right? So when we look at the halvings, Bitcoin new issuance is now slower than gold new issuance, right? Where gold might be growing at, let's say, 2 to 3% a year, Bitcoin's more like 1 to 1.5% a year. And so I think that from a scarcity perspective, it's pretty clear that Bitcoin has now achieved a level of greater, stock to flow scarcity. And then, of course, from the utility perspective, that you can't instantly send your gold to the other side of the world, especially for 5 cents, as we've been talking about on the transaction fees for Bitcoin, and not within an hour. And so, yeah, that's kind of where I think that why Bitcoin has been underperforming this year relative to what expectations people might have had, especially because when we look at the past 3 years, Bitcoin went from basically like $15,000, $17,000 at the lows in 2022 because of FTX. And so it's had a huge run, but I think that bull market's going to continue, and that we're not going to be limited by the 4-year cycle. I think that this might be like a 10-year or 15-year cycle.
It's interesting. Yeah, it's when you think about, because gold kind of surprised me. I think tech is always like they have like a lot of headwinds, but like it will be fun. I think 2026 will be a surprisingly amazing year, as you also say, for Bitcoin. I don't see anything bad happening. And maybe also, this is kind of the thing that I wanted to say way before, that Bitcoin might just bore us to $1 million. I hear that more and more now in podcasts where it just slowly grinds up. And as you also mentioned, that like if it goes down, there's a lot more securities. If it goes up, there's also more like things that hold it down and kind of dampen it. But it just like slowly grinds up to like $1 million and bore us to death to $1 million, which isn't the worst thing, I guess, for Bitcoin.
No, yeah, I think we get to $1 million by 2035. So over the next 10 years, and really, we could get there more quickly or more slowly, just depending on monetary policy here in the U.S. And the fiscal situation, right? So the U.S. just got to $36 trillion of debt. So these are just astronomical numbers, and the amount of political fighting happening here in the U.S. over spending, I think, is unprecedented. This government shutdown is really lasting a very long time, and so I think that's the big question mark: is what will happen for the dollar. Ideally, they would set up a strategic Bitcoin reserve to be able to back the dollar, so print dollars to buy Bitcoin until every dollar is backed by Bitcoin, and we essentially get back onto what we had, the gold standard, right? Get back onto the Bitcoin standard, and have a sustainable monetary and fiscal future.
That's another interesting thing, the shutdown. Like it sounds so big, but then I don't get a lot of news from the shutdown. Like, how big of a deal is it actually for like someone living in America, the shutdown currently?
So if you're a government employee, it's a big deal because you're not getting your paycheck anymore, and so I think that's for one. Two, over the coming weeks, I think that the food stamps, the kind of the welfare benefits that people are used to receiving, those will stop coming in, and so we'll see, what will happen as a consequence of that. I think it puts a lot of pressure on the Democrats to cave. Because I think the Republicans, by and large, while there are cases where they do have concerns about people having nutritional assistance, I think there's also cases where it's kind of questionable whether somebody should be receiving nutritional assistance or not. We do have an obesity epidemic here in the United States, and so I think that RFK Jr. has his work cut out for him in terms of making America healthy again. Look, the reality is that there's also a huge system of private food banks that provide nutritional assistance to Americans who need it, and so I don't think that it's going to be the end of the world. But there are definitely impacts of the shutdown, and the longer it goes on, the bigger those impacts are. But I think that ultimately it's about what deal gets negotiated in DC, and they have to cut spending if they want to get onto a sustainable path. And so I think that the Republicans are correct in pushing for that. and that the Democrats are kind of misguided in that they've really created they were in power for a very long time, and they didn't put any effort into cutting spending and getting the deficit under control.
Interesting. Is there, I don't know if you have any historical data, but was this already the case, such a long government shutdown in the history?
It's the longest that I can remember. I'd have to go look at the history books, but I don't remember ever hearing about food stamps running out. And so it might also be that the Trump administration has decided to allow that to happen. That they could otherwise continue to send out the food stamps, but they're seeing it as an opportunity to highlight that there are a lot of people receiving food stamps that maybe should not be, and that will create an optics situation for Democrats to actually cut back on those programs to make sure that ultimately, so that there's enough resources for the people who do need it the most.
Very valid. We have one question that I ask each and every one of my returning guests, and as you've been now on the second time, you get the question: what have you learned outside of Bitcoin since your last appearance in the podcast?
Wow, that's a tough question. I should have prepared an answer for this one. I think that as I've been looking at the valuation for Bitcoin Treasury companies, something that I had not fully internalized was just how important the leverage ratio is for the valuation. So the greater the leverage, the higher the MNAV should be. And so I think that is something that the market also doesn't fully, factor in. That we'll see how that unfolds, because the other thing that I've learned recently is that STRC stretch that Seyr has put together is this perpetual preferred that pays a 10.5% dividend yield. And here in the US, there's always this question of taxation. So 10.5% after tax would be more like 5%, right? Because let's say you're paying 50% in taxes. But it turns out you don't pay taxes on that because, for a technical reason, it gets marked as return of capital. And so you actually, instead, what you do is you reduce your cost basis in STRC. And so that means that you actually push taxes back 10 years. If you're paying 10% and you're decreasing the cost basis by 10% every year, that means that for 10 years, you don't pay taxes on your dividends. And it's not until you actually sell STRC that then you would have to pay taxes on the gain you have between your $0 cost basis and the $100 that the STRC is trading at. And so it's a surprising tax situation. Normally, things go in the opposite direction where you have to pay more taxes. And so I think that the market doesn't quite factor that in as well in terms of the attractiveness of STRC for people who need income in the short term.
The whole tax thing, I mean, there's a reason why they are tax professionals. Like if it wouldn't be so complicated and so many different exceptions, there wouldn't be that many tax professionals. It would be easy for everyone themselves to do it, I guess.
Yeah, I'm an accountant, so I do have some tolerance for tax talk, but not a lot of tolerance. So I do prefer financial accounting a lot more than tax accounting.
I love that. I literally have to do tomorrow, give my taxes to, give all my accounting things to my tax guy, because he has to file it within like the next 16 days. Horrible thing. But also forces me to look at all my expenses as income and make a nice overview of that. We have an endroutine on the podcast where the previous guest is asking a question for the next guest without knowing who the next guest actually is. And the previous guest asked you the question, what did Bitcoin teach you about yourself?
Yeah. Let's see. What did Bitcoin teach me about myself? I think that there's some things that I'm not willing to change my mind on. And that we all want to think of ourselves as open-minded, and you know, constantly changing our minds. And, Bitcoin, I think that's what Bitcoin has taught me is that, if you're at the bottom of the bear market, like you might want to change your mind about Bitcoin, right? And say, oh, actually it's going to zero, because so, and then seeing Bitcoin go back up, and then you're like, oh, I was right, actually. And so I think that being comfortable with disagreeing with other people and sticking to what you believe to be true in the face of reality and criticism, that's something that Bitcoin has taught me that I had that skill. Thank God.
It's a very important skill in the Bitcoin community, especially if you face outside of the Bitcoin bubble and you talk with people in TradFi or anything like that. Really cool. Thank you so much, Pierre, for being on. Before I let you go, where can people find you and get in touch with you?
Yeah, at Bitcoin Pierre on X. My DMs are open and always happy to talk about Bitcoin.
Awesome. Then thank you so much for being on. And also thank you so much for everyone that is watching and listening for joining us today. As always, I'll be back tomorrow with another episode. Bye-bye. This content is for educational and entertainment purposes only and does not constitute financial advice.